What's going on today, guys? Today we're going to be covering the S&P 500, also known as the SPY. Niconomics. This is going to be an ETF of all of the best stocks in the stock market, just all like 500 of them, chosen by the SPY, all bundled up into one convenient package. So this is what I would give somebody if they had zero experience in the stock market and they just wanted to sort of dip in, start investing, not really be checking their portfolio very much. It gives on average 10 to 12% returns every year. Let's go ahead and zoom out here real quick. We can look at let's do 12 months. Reset the chart view here. Right, so we can see throughout the years, I mean, it started at 94, 92 in the crash of 2008. Now it's at $600. So if we go a little bit less, check this out. I mean, this thing, it really just goes up. There's a very strong trend here, just going straight up. And you're going to get lots of good exposure in lots of different stocks, which means you're diversified. So what's really cool about this is if like Apple goes down a lot, well, you also have Microsoft in here. You also have Tesla. So on a day where Apple has really bad news and they go down, all that money is going to come out from Apple and it's going to go into like Tesla, Nvidia, Microsoft, all those other big companies in here. So it's diversification, it's protection. You don't have all your eggs in one basket, as they say. So this is just like a little intro because I think as a new trader, it's really important to understand these basic things, how the market works. Without further ado, I hope you enjoyed the video and learned something about the SPY. Feel free to comment down below if you have any other questions. As always, thanks for watching and enjoy.
Tired of picking individual stocks and feeling like you're playing a guessing game? Want a simple, powerful way to invest in the backbone of the American economy? Then you need to know about SPY, the Spider S&P 500 ETF Trust. It's not a secret agent, but it is a secret weapon for many investors. SPY is an exchange-traded fund, and it's one of the most popular and heavily traded ETFs in the world. What does that mean for you? It means incredible liquidity. You can buy and sell shares almost instantly with tight bid-ask spreads. This is a huge advantage over less liquid investments. But what is SPY exactly? It's a fund that holds the stocks of the 500 largest publicly traded companies in the US, mirroring the S&P 500 index. Think of it as a pre-made, diversified portfolio, giving you instant exposure to a huge chunk of the American market. You're not betting on one company. You're betting on the overall strength of the US economy. And who are these companies? We're talking giants like Apple, Microsoft, Amazon, Nvidia, Alphabet, Google's parent, Berkshire Hathaway, Meta, Facebook, Tesla, United Health Group, and JP Morgan Chase, the titans of industry. The exact composition changes, of course, as companies rise and fall, but based on market cap, SPY always represents the top tier. Now let's talk cost. SPY is famous for its incredibly low expense ratio, currently around 0.0945%. That's the annual fee to manage the fund, and it's tiny compared to many actively managed mutual funds. This means more of your money stays invested and working for you. Plus, you get dividends. The companies in the S&P 500 often pay dividends, and SPY passes those on to its shareholders, typically quarterly. It's like getting a little extra bonus just for holding the ETF. Here's where SPY gets really interesting. Its versatility. You can buy and hold SPY shares for long-term growth, a classic passive investing strategy. The S&P 500's historical average annual return has been around 10–12%. Although past performance is no guarantee of future results. But SPY is also a favorite of active traders. Feeling optimistic about the market? You can use call options on SPY to potentially amplify your gains. But remember, options involve higher risk. Expecting a downturn? Put options or even shorting SPY can provide a way to profit from falling prices, again with increased risk. This flexibility makes SPY a powerful tool for various investment strategies, from conservative to aggressive. SPY isn't just for Wall Street gurus, it's accessible to everyone. It's a cornerstone of many retirement portfolios, a way to build wealth over time. It's used by institutions and individual investors alike. It's transparent. You can see exactly what it holds. It's liquid. You can get your money in and out quickly. And it's a powerful way to participate in the growth of the American economy. It is great for passive, long-term investing, matching, not trying to beat the market. But, and this is crucial, all investing involves risk. The market can go down and SPY will go down with it. Never invest more than you can afford to lose, and always do your research. Consider talking to a financial advisor to see if SPY fits your specific investment goals and risk tolerance. SPY offers a diversified, low-cost, and transparent way to mirror the S&P, making it perfect for building your financial future. Are you ready to explore the possibilities?
So again, I hope you really enjoyed the video. Just to wrap everything up, the SPY or S&P 500, it tracks the 500 largest US companies. You're going to get access to diversification, so you'll have a broad market that you're invested in. It's very good with liquidity, meaning for options or shares, you can buy and sell them quickly. You don't have to worry about big differences in prices. It has a low expense ratio, so you're not getting taxed a bunch from the people who manage the ETF. You get dividends even, so you get money sent to you by just holding it. You don't have to do anything special. You get to see all of their holdings. Transparency is very important in the market, and you can see their top holdings. Even just looking at something like this, right? You can see, here's the weights at least, so you can see you get technology, healthcare, financials. The list goes on and on. And you just buy and hold it. You know, it's a long-term growth strategy. You get 10 to 12%. It's good for beginners and for people who've been doing this a long time. All investing involves risks, you know, so always make sure that you're not spending money that you don't have. Make sure the credit card's paid off, the mortgage is paid, all those good things, the car loans, all those good things. And then, yeah, other than that, you could start making money, which is what we're all trying to do. If you watched it this far, really appreciate you for taking your time to check the video out. Make sure to like and subscribe, and turn on notifications for future videos. Thanks, guys. Bye. Niconomics.